Hey guys, Ian Belina here, and guys, it has been a hell of a ride. It's now the long-awaited time for the security token video. But before we can even do that, I have to go take a step back and just recap the last 2 years since my ICO video. ICOs, baby, are the new gold rush. In today's show, I'll break down how you guys can leverage ICOs to make your first million. When I made that video, I wasn't a millionaire, but now I am. Not just me. What really satisfies me even more is lots of people around the world became millionaires from that video. Thank you guys so much for the support. That video had over 350,000 views on YouTube. It went viral. It basically helped build my brand. When I filmed that video, I was in my basement, still working at IBM, dreaming of being a millionaire. And the last 2 years have been a wild ride, a hell of a ride.
I'm the first rock star landing on the moon. If the market took a stage dive, I'll grind the exchanges.
Right, but guys, for everybody out there who watched the video and made life-changing money, let's just quickly have a moment of silence for you guys. You know, you guys executed. Pat yourselves on the back, because so many people watch a video and just kind of move on, right? They go on to the next video on the playlist. But for everybody out there who executed and took action on the comments and the analysis I had, not financial advice, right? In that video, that ICO video, I mean, I went on a crypto world tour, over 35 countries in the last 1 year, hosting events everywhere, meeting you guys everywhere, meetups as big as 1,000 people in Moscow, Russia, 800 in London, 700 in Amsterdam. I mean, crypto family was strong, and the stories I heard everywhere about people who made amazing amounts of money, who had crypto retirement. One person in Auckland, New Zealand told me that, hey Ian, I was able to help my mom retire thanks to that ICO video.
And under her breath, she said, you know, maybe one day my son will retire me. Yeah. It was 6 months ago.
Crazy,
I called her
right?
last week, and I called her last week, and I said to her, I said, you're going to have that conversation with them at work very, very soon. Just be like that.
Somebody who told me, hey, Ian, I was able to buy a house thanks to that ICO video. I mean, that's what it's truly about.
Life-changing money. Help me afford a house deposit.
And obviously, I also got hacked, lost over $2.5 million.
No, they did not steal everything. This will not impact future operations regarding me, my lifestyle, my business.
I think the most beautiful thing about it is, despite getting hacked, I still don't have to go back to a 9-to-5 job. I still have financial freedom. Because to me, as I mentioned before, it's about getting freedom, getting my time back. Not so much about the money buys you time, right? Because just think about it, guys. I turned 90 grand to over $5 million, lost half of it from the hack. Then also the bear market, when the ICOs bubble popped, cryptocurrencies went down over 90%. But despite all of that, I still don't have to go back to a regular day job. I'm now doing crypto full-time, even in a bear market. To me, that's what's really beautiful about it. So thank you guys so much for the support, but also thank you to everybody out there who listened to my opinion, not financial advice, who listened to my opinion and executed, right? Because as I mentioned before, right, 9 out of 10 people don't execute. They don't take action. They don't go after their dreams, their goals, their aspirations. But you guys watched the ICO video, but you guys would tune in for the live streams. We had those live streams twice a week. I mean, those were the glory days. Twice a week, crunching the data, the analytics, finding those Hall of Fame ICOs, the icons, the Wabi, the Dragon Chain, Power Ledger, TwinDX, Loom Network, right? Doing all that data analysis, right? And it all came from that one video. The ICO video was what began everything. But guys, what's next? Right? People have been saying the last 1 year, what's next, Ian? The ICO bubble has popped, what's next? Well, I think security tokens could be it. I'm in this to make money, right? And to make money, we have to speculate. We have to be early before anybody else is early. It took me a while to really do this security token video because I had to make sure I was ready. I've been reading books on this, reading books on investment banking, venture capital, the equity space, going to conferences, going to banks and having meetings with people at Merrill Lynch, at Bank of America, asking them questions, doing my research, right? Always do your own research. But now I feel like I can really have a better understanding of the space, where it is now, where it's going. And I think this video is now ready for the world to watch and see how we can crack the code with this in the same manner we cracked it with ICOs. So are you guys ready? Hit the like button, subscribe to the channel. Let's get into it. Bitcoin. Bitcoin was founded 2009, Satoshi Nakamoto. Then by 2013, we had what we call the first Bitcoin bubble. Bitcoin reached its first all-time high, over $1,000. People made millions and millions of dollars. They got into Bitcoin at $0 when it was practically free, to $10, $100, and then it went to $1,000, and it made lots and lots of millionaires. Then that bubble popped. It popped because of Mt. Gox. It popped because of regulation with New York, for those who watch banking on Bitcoin. But it basically popped. But despite popping, it made lots of people famous, lots of people money, more importantly, right? Because first of all, we're investors. We're here to make money. We're here to make gobs and gobs of money. And when that bubble popped, Bitcoin went tanking, and people thought Bitcoin had died. What was next? Well, a few years later, 2014, a guy called Vitalik comes on the scene. He creates Ethereum. Ethereum basically creates the entire market for altcoins, alternative coins. And he launches basically the first ICO platform. The Ethereum ICO made lots and lots of people millionaires, those who were in the ICO and the pre-sale especially. It let other people issue their own digital currencies, their own cryptocurrencies, altcoins. From this entire ICO landscape was born from Vitalik, and we call this the utility token bubble, also called the ICO bubble. And this went all the way until 2018. In 2017, we had over $6 billion raised in 2017 just from ICOs. In 2018, we had almost $8 billion raised just from ICOs. So this was really an innovative way to raise money. And this was really the second bubble for cryptocurrencies. But guys, what's next? I think there will be a third bubble. Obviously there has to be, right? Because we can't just be wrecked forever, right? There has to be something else, some other hope, right? As my friend Miho says, hope dies last, right? Cryptocurrencies have been wrecked for those who, like myself, who are part of the ICO phase. Now that the bubble popped, almost every cryptocurrency has declined by 90%. But this is not the first time Bitcoin has died, not the first time cryptocurrencies have died. So what is next? In my opinion, and also from talking to lots of people out there in space, they think security tokens are next. Because the whole point as an investor, right, especially as somebody who's trying to speculate and make amazing amounts of money, life-changing amounts of money, we have to be early. We have to be in before anybody else is in. We have to believe before anybody else believes. As the song says, are you a believer? So just think about this. Look at the entire security space. We have over $256 trillion in assets, in securities, whether real estate or what have you. All of this, imagine if all of this was put on a blockchain. Imagine if all of this was tokenized. Then think about exchanges. There are over 60 global exchanges around the world with over $69 trillion in assets. Imagine if all of this is being tokenized and put on a blockchain. So securities being tokenized, I think, is going to be huge. There's just too much money, way too much money for there not to be an opportunity for anybody to make money. Does that make sense? Let me say that again. There's way too much money for us not to be able to make money on this. Not financial advice, right? But just think about it. $69 trillion on global exchanges and $256 trillion in real assets that can be tokenized. I mean, so I think there's an opportunity here for us to make money, right? Whether you want to call us rent seekers or people who are just traders or just trying to make money from arbitrage, who cares, right? Either way, we're trying to change our lives, not just our lives, our families' lives, leave a legacy, but also give back and impact to the things we care about, whether it's charity and what have you. So I think there's just too much value, too much opportunity, too much money for us not to be able to make money. And I think there's so many reasons why security tokens are promising and why I think there's a very big opportunity for investors who are early into security tokens to make money. So why are so many people saying security tokens are the next bubble? You're probably wondering, I mean, aren't these the same people who said Bitcoin was going to go up? Then we all got wrecked. I know how you guys feel, but let me tell you why. First of all, these are real tangible assets. Assets you can grab and hold. You can grab them, you can even drink them. Not really, but the tangible assets, real value. Think like real estate, stocks, bonds, options, debt. These are real assets, but also have ownership rights, economic rights, shareholder rights. They aren't just some stuff being made in the air. Like if something goes wrong, you are legally protected. You can go to a court, to a judge, and get your money back, possibly, right? As opposed to regular tokens, as you guys know, right? Lots of people lost so much money on scams. But with security tokens, we have actual rights that protect us legally. The criteria, the bar is much higher. Not every Tom, Dick, and Harry and Jane can just launch a security token or a security. Right? The criteria is so high for regulation that really there are fewer scams, meaning that investors have much more opportunity to make money and less opportunity to lose money. Obviously nothing is guaranteed, right? But the fact that there are less scams and it's something that's tangible of value that can be traded globally anywhere in the world. So for example, if you're in China, if you're in Korea, India, Africa, Uganda, where I'm from, USA or DC, where I'm from as well, or Australia, anywhere in the world really, right? This entire securities market, 24/7, can be put on a blockchain. Because the regular market isn't 24/7 on securities. If you go to Wall Street, it's only open from Monday through Friday. On occasion, some stocks are available on the weekends. But with securities, this being put on a blockchain, tokenizing this, the whole world can trade 24/7. It's really creating a global marketplace. And it also allows things that typically were not illiquid to become liquid. So for example, especially places like Miami for Art Basel, right? There's a huge art scene. If you go there, so many people are trying to buy the next big art piece. But what if you could tokenize that? What if you could put that on a blockchain? And let's say you don't have the money to buy the entire piece. You could buy a fraction of that and have a fractional ownership. So in the same way that we were fractionally owning tokens with Bitcoin, right? Owning a piece of a Bitcoin or a fraction of a Bitcoin, being to own a fraction of real estate, being able to own a fraction of a house, of a commercial complex, and being able to trade that fraction on an exchange. That's the real value, because these are real assets, right? So imagine you go to a house. Let's say you're just a regular Joe. You don't have $1 million to buy $1 million commercial complex, but you have $1,000. Typically, you couldn't buy that commercial complex. Let's say it's the Ritz-Carlton, right? Let's say they're tokenizing the Ritz-Carlton. But with $1,000, right, assuming the threshold for investing is very low, right, you could put your $1,000 and get a fractional piece of that Ritz-Carlton. So this really gives much more opportunities to everybody. Plus, when you invest, you're getting legal rights. You're protected, much more protected than you were before with regular tokens. All right, so speaking of tokens, let's take a step back to make sure we define tokens and everything else we talk about, because we'll assume not everybody here has already achieved crypto retirement. Let's say that, because we know now there are new people coming into the space, right? So let's make sure they're up to speed before we go into delving deeper into security tokens. What is a cryptocurrency? A cryptocurrency like Bitcoin or Bitcoin Cash or Ethereum, even Tether, can be used outside of its ecosystem as a currency. I can pay somebody for that. I can pay somebody for work, for buying something like a Starbucks coffee or what have you, outside of its native ecosystem. That's what a digital currency is, a cryptocurrency. Now, on the other hand, a utility token is a digital representation that gives you access to a product or service that can only be used in that ecosystem. It cannot be used outside that ecosystem. So I can't use that token to go pay for Starbucks, to go buy a car, to go buy a Lambo, to go buy a house. It can only be used as an access for that product or service. Think of this as something similar to a gift card or to a software license. So we've covered utility tokens, cryptocurrencies. Let's now move on to what we're here to talk about, security tokens. What are security tokens? Think of them as digital ownership, something that could be equity, for example, like in stock, or even options, or even debt, or a loan. Getting ownership, but putting that on a blockchain, putting that on a distributed ledger technology. Basically, think of it as a public or a private database, which everybody can access, and there's one single version of the truth, right? So getting actual ownership in this, and these real assets, but being put on a blockchain via a token. That's what a security token is. So in the example of real estate, right? Typically, these assets are illiquid. Real estate, art, what have you, or equity. But imagine being able to put them digitally on a database and then trade them, and also trade fractions of these, right? Fractional ownership. So this is really what security tokens are. It's tokenizing securities. Or put a different way, utility tokens give you access to a product or service. Security tokens give you actual ownership in the company. So you actually own the company. You're investing in that company. It's an investment contract. And I think this is why security tokens really give so much opportunity for investors, because there's so much upside. So while utility tokens represent access to a product or service, security tokens give you actual ownership in the company, equity. And I think this is really big for the space because it can let people have access to companies or even products or services that, or assets in this case, that typically were illiquid. But I think the real value is if we now take a step back and go and revisit ICOs and now look at what is possible in the ICO space if we were to do the same thing we were doing the last few years with securities, this is where the big value add are for security tokens. Initial coin offerings, also known as ICOs, I mean, this was a gold rush, guys. I mean, last few years, people made lots and lots of money, myself included, and the community as well. But what are they for those who are brand new? ICOs, think of it as crowdfunding, similar to GoFundMe, Kickstarter, where you go and you invest. Well, for ICOs, you invest your money, but for GoFundMe or Kickstarter, you're basically giving money to get something back. Now with ICOs, it's the same thing. People are giving their money in exchange for a digital token, a cryptocurrency. So for example, with ICOs like Icon, people gave Ethereum or Bitcoin and they get back a token which gives them access to the Icon platform. Now, this sounds good and dandy and everything, but a study was done by the Satis Group and they found that over 81% of ICOs were scams. That's 8 out of 10 ICOs where people got wrecked, lost their money, like zero, straight to zero. Not just 90% decline, straight to zero. So people lost their savings, their investment, and this is really why the ICO bubble popped. With so many scams happening in this space, because people saw the opportunity to raise lots of money. As a founder, I mean, as I said before, what a time to be alive. Imagine being an entrepreneur, being able to raise $10 million, $100 million, or $1 billion without selling one single percentage of equity in your company. What a time to be alive. That was a great time for founders and entrepreneurs. It was also a great time for investors, because investors were investing their money and getting a 5x, a 10x, a 100x on their investment in 4 months, 6 months or less. So both sides were making money, but eventually this wasn't sustainable. This had to pop, because as so many charlatans and fake people and scammers saw the opportunity at how people were just blindly throwing money at ICOs, so many scams popped up and just raised money, right? For example, I know those on this ICO that they took money from investors the next day, shut down the site, they said they're out of business. Like in less than a week after taking investors' money. I mean, the scams were just so in your face. This is really what caused the bubble to pop, that plus regulation, because bodies like the SEC, the Securities and Exchange Commission, had to come and clean up the space because there's so many people getting wrecked. And this is really what the issue is with ICOs and why we think security tokens could fix this. One other thing to add. So ICOs are also an issue because investors, those people who got wrecked and lost their money, their savings, right, because 8 out of 10 were scams, they had no legal protection. They had no rights, no investor rights, no economic rights, shareholder rights, voting rights, what have you. They had zero rights because when they invested, they were just buying access to a token. Think of it as going to a store and they say no refunds, right? So that was a very, very big concern and also why the bubble popped. So I think security tokens will fix this entire issue we're having with ICOs based on the judgments being issued by the SEC. So the last 2 years, the SEC has been telling us what it defines our securities. Basically, they said every ICO out there pretty much was a security. And this really shocked the space. It shocked so many investors. So you add this plus the scams and everything, and the entire bubble just popped. Now we have to take a step back and see, okay, how is the SEC defining a security? Now they use what's called the Howey test. And the Howey test tells us this. Something can be called a security if it meets these 4 points. 1, there's an investment of money. 2, there's an expectation of profits from the investment. 3, the investment is being made into a common enterprise. And 4, any profits for the investors are being made from the efforts of others, meaning that I'm not doing anything and I'm making money. According to the SEC, if you meet all 4 of those, you are a security. Now, the SEC even gave us examples of this via judgments. They issued judgments to Paragon ICO and to AirToken ICO, an ICO which I was part of. And they fined these ICOs over $350,000, plus forced them to refund investors their money. They had to give back $12 million to investors in USD in a bear market. Now, the SEC said there were securities and issued these judgments because these companies were US companies that took money from US investors. And they primed investors, telling them that they could expect their investment to appreciate in value. And they did this via social media, via their Telegram groups, their website, their blogs, their forums, telling how investors could make money off the efforts of the company and not the efforts of the investors. Meaning that they're investing in a common enterprise, not doing anything, not doing squat, and making money. And the SEC said this is a security, because the SEC is trying to protect US investors. Now, this is why lots of ICOs the last few years also began banning US investors, because the requirements and the regulation around this in the US is so high that unfortunately not everybody in the US could participate. These ICOs like Paragon also told investors they could expect these tokens to be trading on secondary markets, on exchanges. And the SEC looked at all of this and basically told us what it thought. And they said, if you do all of this, you are by definition a security and you have to register with the SEC or we will come after you. And I mean, this company's got wrecked. But on the good side though, investors got their money back. So the SEC has told us what it thinks are securities. But let's take a broader view. What are securities from the investor perspective? Securities are financially tradable instruments. They could be stocks, they could be options, they could be debt, like a loan or bonds. These are real tangible assets that give investors legal rights and legal protection. They also give them rights to make money off of them, right? Via dividends, revenue share, profit sharing. These are real assets with real economic value, and they also give the issuer of that security requirements for reporting to investors, for sharing information with investors. Securities have been around for a long time. The first bond was issued in 1517. I mean, that's a long time. The first stock was issued in 1602. So this is not anything new. This space has been around for a long time. But in terms of regulation in the US, most securities regulation stems from the Securities and Exchange Commission Act in 1933 and 1934. So the SEC created this regulation to protect investors because people got wrecked in 1929 with the stock market crash. So many people lost money, and the SEC said, time out. We have to be the adult in the room and really police this now. And they created these regulations with the 1933, 1934, and even 1940s and so forth. And they keep on creating regulation, and that's when the SEC was formed in the US to protect investors. So the SEC is not about trying to make money. They're here to protect investors, to make sure when they get wrecked, they have legal protection, and also trying to make sure they don't lose as much money as possible. So the SEC's main interest is to protect investors from losing their money and to make sure that they can really maximize their investment by having as much protection as possible. All right, so now you're probably wondering, who creates a security? Well, anybody can make a security. This is just something that's issued by the issuer. This could be a company, like a startup, issuing equity, early stage, from seed stage to Series A, B, C, D, or even IPO. Or it could be somebody issuing a security or ownership in an asset like art, real estate, or even a government or organization issuing bonds, basically creating debt, and where they say, okay, give us this investment and we'll pay you a constant stream of income over a period of time, whether annually, quarterly, no matter whether or not the asset goes up or down. That's what a debt-like security is. Now, when we talk about securities, you'll constantly hear the term primary market and secondary market. Primary market means this is the first time a security is being issued by the issuer. This is typically private. Secondary market is typically the second time that security is being sold or traded. So this is typically an exchange. Now, when it comes to securities, we should also be aware of private and public markets. Private markets are typically illiquid. they sound just like the name. They're private, typically among a small group of investors. This is mainly in the space for private equity, venture capital. Small groups of investors buy securities, equity ownership, whether in a company, in real estate, in any asset out there, or even debt. And public markets are things that are publicly traded on exchanges. Think of this like Wall Street, the NASDAQ, global exchanges anywhere around the world. Now, the criteria for public exchanges is much, much higher. For any company, for any private company to go public via an IPO, the criteria they have to achieve is much higher, such as annual reports and reporting to the SEC or whatever body they are in their jurisdiction, whatever body there is that handles regulation in their jurisdiction, or having audited financial statements. So basically, they're trying to make sure that if something's going to be available to the whole public and not just private, they want to make sure that people don't get scammed. So that's why the criteria is so high. Now, one of the beauties of security are that investors get rights. Recall how I mentioned earlier how investors with utility tokens got wrecked and couldn't do anything about it when they got scammed? Now, with security tokens, investors get legal rights that protect them. These rights include economic rights, control rights, information rights, litigation rights, and in the case of commodity and derivatives, physical delivery rights. So the first one, economic rights. Economic rights define whether or not a financial instrument is an equity or debt-like security. In equity, the economic right of the investor is to receive dividends or a share of the company profits. If investors are being paid regardless of whether or not the asset goes up or down, that's a debt-like security. Now, there are some securities that are both. These are called quasi or hybrid equities. Securities also give investors control rights, meaning they have the right to influence the success of their investment via voting, via being able to participate via board meetings, whether annually or quarterly. And this is typically done via different shares of stocks. We have common stock, preferred stock, that give people different access in terms of voting. Voting rights are typically exercised via shareholder meetings, which are held annually or even quarterly. A company can have different formats of stocks. For example, preferred stock and common stock. Google, for example, which is publicly traded, has two types of stocks available to investors publicly. Common stock is a normal stock where one share gives you one vote and a portion of dividends. Dual share class stocks have different share series, which are usually called Class A and Class B. Dual shares are common when an issuer wants to preserve control on early founders over late-stage investors. This is what Google did when they split their stock. Now, debt-like instruments typically have no control rights at all. Investors in securities also have information rights, meaning that an investor has the right to get information from the company about that company. These requirements are legally binding. Private securities have to give investors annual reports on the company, including audited financial statements of the company and its finances, the right to see shareholders on the cap table, meaning other investors in that company. So for example, with the ICO space, some ICOs didn't share what investors were in there and how much they invested. But with security tokens and securities in general, when you invest into a security, you have the right to see what other investors are in that company and how much they invested, what percentage they invested in. This is a game changer, right? Because if you're in the ICO space, I mean, lots of people would say, hey, how much did Ian Bellina invest, right? I mean, I've always tried to be as transparent as possible. But in the securities market, I mean, this is a requirement. If an investor says, hey, show me the cap table, show me who else is invested and how much they own, you're legally required to show that to them. Now, granted, this is for privately held securities. Now, when it comes to publicly traded securities, listed securities, the criteria is even much higher. So before even issuing a listed security, the issuer has to put out what's known as a prospectus. This is similar to the ICO space, like a technical white paper or a white paper, but the only difference is this is a legally binding document. So this has a much more legalese, much more legal language. This is something that's typically done by an investment bank and a lawyer or law firm, where they go through and make sure everything they say is by the book, right? So they can't just be some ICO putting out there just anything they want, because when it comes to prospectus, this is a legally binding document. You have to tell investors about the company, their finances, any warnings or risks involved to the investor, and this is legally binding. Then once listed, the security has to put out quarterly and annual reports to investors, and also guidance in terms of where they think the equity or asset is going. Next up are litigation rates. When it comes to equity, investors, people who own equity, can go after a company or even the board of directors for wrongfully using the capital of the company, doing anything illegal. So if you think about this, the ICO space, 81% were scams. Imagine if those were securities. We could legally go after them. Not just the company, but even the managers, the board members, go after them personally. When it comes to debt-like instruments, we can also go after people for defaulting on debt. For example, a loan, a mortgage loan, right? People in the 2008 housing crash, lots of housing companies were going after homeowners for defaulting on loans because that's a security. They can legally go after you. Now, when it comes to commodities or options or futures, you also have the right to physically deliver something and have it be brought to you. All in all these are the rights that investors get when they invest in securities. And this is why I think this is huge. So we have economic rights, shareholder rights, information rights, litigation rights, physical delivery rights. All of this is a much better offer for investors than tokens, than utility tokens. Because now, when you're giving somebody your money, you know you're legally protected and there are ways for you to go after them if anything goes wrong. All right, so that's been a lot of stuff. But now I think we have to really cover regulation again. Because securities, that's one thing that keeps on coming up. Regulation. And this is really a big topic, especially in the US with the SEC. Now, how are securities being regulated in the US? Now, in general, no matter where you are, there's some kind of body that regulates securities to make sure that investors are protected. And the main goal for all these different organizations are to make sure that investors are protected from losing money as much as possible. So they'll have requirements such as who can invest in a security. This is typically called accreditation. So in the US, you have to have an income of over $200,000 annually, 2 years in a row, or you have to have a net worth over $1 million. So basically, you have to be rich to invest in a security. Now, lots of people complain about this, and the reason the SEC has this is to protect investors from losing money because they feel like if you're already rich, you can stomach the pain. You can take that L, basically. But for people who are not as rich, they don't want them to risk taking that L because they know that they can get wrecked because then they don't have the money to recover from that. There's also regulation in terms of who can even sell a security. So typically you have to have a broker-dealer license to even sell a security. So you can't just buy a security from anybody when it comes to those being traded on exchanges, right? So a typical exchange will have multiple licenses, such as a broker-dealer license. And there's also regulation in terms of called ATS in the US, Alternative Trading System, meaning it has to be a licensed exchange or trading system to purchase that security. Now, when it comes to the US, we have 4 different ways to regulate securities. We have Regulation A+, Regulation D, we have Regulation CF, and Regulation S. The most common one is Regulation D. Regulation D says that an issuer of a security can raise money from investors as long as they're rich, as long as they're either sophisticated investors or have post accreditation, meaning that they're rich. Now, they can do this if they file a Section 506C with the SEC telling them, okay, we've issued this security to these investors, this is how much we've sold, and the SEC knows, okay, let's keep track of this. So the SEC is okay with you doing it if you tell them, hey, we're raising money from these rich people, and we have verified that they're rich and that they can take this L. So meaning that if they lose money on this investment, don't worry about it, they're rich people. Now you're probably wondering, Ian, I knew it. I knew there was no way to make money on security tokens, it's just for rich people. How does the average person, average Joe or Jane make money on this, right? Maybe just a college student or just somebody who's working a 9-to-5 job. You haven't become a millionaire yet. How can you take advantage of security tokens and really possibly make 100x? Well, there are 2 ways to do that. Obviously not financial advice. But when it comes to securities, the next portion, Regulation A+, the SEC saw this, right? They saw that when Obama passed the Jobs Act, they saw that, okay, the general public is being excluded from these opportunities, from these investment opportunities. We have to create a regulated way to make them have access to this. So they made Regulation A+, which says that a company, an issuer of a security, if they get approved for Regulation A+ filing, they can raise up to $50 million. That's 50. $50 million from the general public. Not just rich people, but anybody out there. They can raise up to $50 million from them. as long as they get approved. Now, this is great. I think this is really a great opportunity because now people can really become involved in securities and purchase securities, especially if we're going to tokenize the space. But on the downside is mainly for the issuer. The criteria is so high, so high, meaning that you can't just be any random ICO and just get a Reg A+. You have to really get approved by the SEC, and on average, they only approve about 50% of people who apply, or the companies who apply. And the costs involved in just filing in terms of legal work, in terms of filing fees. I mean, for me personally, I looked into doing a Reg A Plus for my community, and my lawyers told me it was over 55 grand just on legal work. Audited financial statements, you have to have all your application and paperwork being reviewed by the SEC. They have to make sure that, okay, you know what, this person is qualified to even be doing this, right? You can't just be some dude doing vitamins, then says, hey, you know what, let me do a Reg A Plus for securities for a trading exchange. They'll be like, you have no domain expertise, right? So they really go through and verify and make sure the right people are doing what they're supposed to be doing in terms of raising money, so investors don't lose their money, because that's what the SEC is trying to protect, right? So I think the Reg A Plus is a nice vehicle for the general public to participate, but there won't be as many Reg A Pluses as there are Reg D, because Reg D is just done privately amongst rich people, right? Most private placements, most companies that raise equity do a Reg D. So Facebook, Uber, Amazon, all these companies, they file Reg Ds when they're raising money at early stage, because the criteria is much less, right, obviously. But with Reg A Plus, it's the higher criteria, but it's really one of the few ways to get the general public involved, especially if they aren't rich. Now, the other opportunity is called Regulation CF, which stands for crowdfunding, meaning that your platforms like GoFundMe, Kickstarter, what have you, so something like that, but for securities, right? There are platforms out there like Start Engine, like Seed Invest, that let anybody out there go up there and invest in a security. Now, the downside is the issuer of that security can only raise $1 million. So it's nowhere close to a Regulation A+, where they're raising $50 million, but the criteria is much lower, right? So they don't have to go through all their stringent requirements of getting all their statements being reviewed by the SEC and everything. But as a downside, they can only raise $1 million. So for the average person out there, if you haven't made your millions yet, those are really the only opportunities available. But I mean, it's still better than nothing, right? You can still make some decent money if you find the right opportunities and you capitalize on them. So next up are Regulation S. Now, this is really where I think most people out there can make some money. But unfortunately, this will exclude U.S. investors again. So similar to ICOs, how most ICOs were banning U.S. investors, Regulation S, basically called the Harbor Rule, lets any company out there that's raising money outside of America, all they have to do is just file this paperwork, and they can raise as much money as they can from anybody outside the U.S. Because the SEC is only concerned about protecting U.S. investors. So if you're raising money from investors outside of the U.S., they don't really care. All they care is that you tell them that you're raising money from people outside the U.S. But then once you do that, you have to abide by their securities regulation in whatever jurisdiction you're raising money from. So I think, once again, unfortunately, when it comes to security tokens, most investors in the US will have less access to all these different investment opportunities, similar with ICOs. So we've been covering securities and the regulation around it. Let's go back to security tokens again, and securities, right? So to kind of review again, securities are financially tradable instruments being tokenized and put on a blockchain. So this could be equity in a company, this could be real estate, this could be options, art, what have you, real tangible assets that give you ownership, and you have legal protections. You have legal rights to that. So when we tokenize this, the value add is that this is think of this as programmable ownership. So when it comes to dividends, for example, being able to, using a smart contract on a blockchain, automate the entire process. So think of this as automation, right? Being able to automate dividends. So say via a smart contract, every quarter or every time this action happens, this person gets paid their dividends. All this being done on a blockchain via a token. And this is big because we can really eliminate the middleman. And this brings down lots and lots of costs when it comes to fundraising to just regulating the space when it comes to securities. So, because we take away the middleman, no banks, no what have you. Same thing with tokens, right? Tokens and cryptocurrencies and the blockchain takes away the middleman. So now we can go into the securities market space and take away the middleman, letting people get shareholder rights, all this with no middleman. All this could be automated. Automation is really going to kill lots of the inefficiencies in the security space, which is why we think this is really going to be very innovative. One other example is, for example, if somebody steals your funds, if somebody steals your security token. With a regular token, if somebody takes your token, tough luck, you're wrecked, right? For example, with me, right, when I got hacked, that was an L. I took that L. They took my money, right? Trying to recover those funds is hard. But with securities, you have legal ownership. Like, you can go to court for that. Legal ownership. So same thing with security tokens, right? If somebody takes your tokens or whatever happens, you have legal ownership, which makes the process of recovery of funds much, much easier. So we're talking a lot about security tokens, but the big thing now are how do we make money from this, right? How do we make money as investors? And similar to ICOs, right? The first time a token was being issued was called an initial coin offering, an ICO. Well, now we have the ICO version of security tokens, which are called STOs, security token offerings, meaning that a security issuer can issue their security token to investors in the same manner like an ICO. It's really the same thing, but these are security tokens as opposed to regular utility tokens. But this is different because now investors have actual ownership on something. So when you get into an investment contract by giving somebody your money, you know, okay, you know what, I'm legally protected. I have legal rights. I can ask for the cap table. I can ask for X, Y, and Z, right? If the people get wrecked or if the managers do anything that's wrong in terms of the company, I can go after them legally. And this is really, really big for the space because this cleans up the space. Because don't forget, guys, 8 out of 10 ICOs were scams. With STOs, that number is definitely going to go down. I mean, probably not to zero, but I mean, because nothing is really guaranteed, right? But we know the number is going to go down by a lot because the criteria is so tough. It's so hard for these shaky products to just issue an STO. You have to really have lots and lots of regulation around this. And by cleaning up the space, I think this will really make the entire crypto market space much, much better in the long term, right? Because now you can bring in all these large investors, the Wall Streets, the institutional investors can come in now because they know, hey, I have $5 billion. And I know if I invest into something, I actually own it and I'm legally protected. That's huge for the space because we have Facebook creating a cryptocurrency. We have Samsung now getting into the space. We have JP Morgan with the JPM coin, right? These companies have been waiting for this because they know, hey, we have a very big platform, very big audience, very big customer base. We want to make sure we are legally protected. We want to make sure we're handling our fiduciary duty, right? We're basically looking out for our investors. Now, the old way the market was in the crypto space with utility tokens, that was very tough to do, especially publicly. But now, with all this regulation coming in and cleaning up the space, it makes it much, much more friendlier for these companies to join and hopefully take us to the moon. All right, so now you're probably wondering, okay, STOs sound good. Where can I participate? Where can I find STOs? Where can I find that hot STO pick? There are platforms out there available like sharespost.com, like stomarket.com, like banktothefuture.com, where you can go there and typically you have to pass a verification process, or typically you have to be rich on those platforms, right? You have to meet the requirements for whatever the regulation is, whether it's regulation D, which is what most STOs right now are. However, there are platforms out there like startengine.com where they may have some regulation A+ STOs or even regulation CF STOs, right? Meaning that the general public can participate and get equity ownership in whatever that issuer is issuing. So those are platforms where you can go and find STOs to invest in. Now, granted, right, the space is very young, so there aren't as many STOs out there, but I think in a couple of years, the space will get more mature. Now, if you're an issuer, you're probably wondering, okay, I'm a startup, or I have this real estate business, or what have you. How do I issue my own security token? There are lots of platforms out there. The main ones right now are Polymath, Securitize, and Harbor. These are platforms that let an issuer issue security tokens. So they basically automate the process for you. So you don't have to really do as much work in terms of technology development. It's kind of a very what you see, what you get model where you just kind of go through a GUI, fill in some details in a form, and they issue a security token for you. And they also handle the KYC and all the regulation requirements, meaning that all the shareholder rights, the annual voting, all that stuff is being done inside the platform. So I think this is really big for the space because now we're getting much closer towards a cleaner environment for investing in security tokens, but also in cryptocurrencies in general. So we talked about, okay, you've issued a security token or you've purchased a security token. Typically these have lockups that range anywhere from 6 to 12 months, depending on where you purchase them and the issuer and the regulations in that jurisdiction. But once you've purchased that exchange and it becomes available for trading, where can you go? There are two main platforms. There's T0.com, which raised over $270 million, and they have a valuation of over $1.5 billion. This is owned by a publicly traded company called Overstock.com, and it's one of the big cryptocurrencies exchange out there for security tokens. The next one, which is much smaller but also good in its own way, OpenFinance.com. This is kind of a hybrid between a DEX and an exchange. This lets investors trade, and both of these exchanges are regulated, which is crucial because you can't just trade security tokens on any random exchange or DEX. It has to be regulated. They have to have licenses. They have to have a ATS license, which means alternative trading system, or they have to have a broker-dealer license to issue security tokens to investors via an STO, right? So all these platforms are regulated, meaning that they have to meet a high criteria just to even be in business. So this is what it means when we say we're gonna clean the whole space up. All right, now, so far we're talking about all the good stuff about security tokens, but there are some concerns. Main concerns for investors are these tokens could be illiquid because they, as mentioned before, they are holding requirements when it comes to security tokens. You can't just trade them on day one. So if you purchase a security token via an STO platform, you typically have to, especially in the US, you have to hold them for up to 12 months before trading them. If you're outside the US, it could be much shorter, maybe 6 months. But depending on the jurisdiction you're in, there are requirements in terms of how long you can hold them before trading them on a public exchange. Now, this definitely creates issues of tokens being illiquid compared to regular cryptocurrency tokens. But I think as the market matures much more, I think the space will have more value, more liquidity to investors. So I don't think it's going to be purely illiquid. I think there'll still be opportunity, right? Because don't forget, guys, over $69 trillion in securities are being traded publicly on exchanges already. Over 60 exchanges globally. And over 256 trillion in real assets could be tokenized on the blockchain via security tokens, right? So I think eventually when all that money and that volume starts to go onto security token exchanges, I think this will definitely peak. But I think right now this definitely is a concern. But down the road, let's say 3 years, 5 years, 10 years down the road, I don't think it's going to be an issue. So many projects are trying to avoid being called securities because the regulation is just so strict that it really would hinder them really getting a decentralized community and ecosystem and having network growth, having that network effect, basically going viral. Because, for example, with the withholding requirement, not being able to trade a security so quickly, not being able to share that with the community, being able to restrict who can invest. Lots of projects in the last few years view this as really something that would stop them from growing. But I think this is something that's healthy for the space, just based on how many scams they were, based on how people lost money in this, right? So I think this is needed to clean up the space. The other downside and concerns, which is justifiable, not everybody can participate. But I think that's good, because, do we really want people investing in ICOs with no KYC? What if you're a terrorist? What if you're doing it for bad reasons, right? We have to be able to screen where money is coming from, especially for the market to get more mature and to get more respect in other industries. For example, it's very hard right now to get a bank account for a crypto company, for a blockchain company. And to do that, to clean up the space, if we have KYC, AML, KYC, which means know your customer law, or AML, which means anti-money laundering. So if we abide by these rules, we'll in a way be ushered into the entire banking industry, and it'll be much easier for blockchain companies to do business. And if it's easier for them to do business, it'll be easier for them to grow, make money, and for us to make money. So I don't think it's necessarily a bad thing. When it comes to regular investors not being able to participate, with Regulation S, Regulation A+, and Regulation CF, they can still be a part of it, especially those in the US with the CF and A+. But the criteria is definitely much, much stricter. So there are less scams for them to invest in, which is a good thing. But with the criteria being so high, the risk to reward ratio won't be quite there compared to people who have chances to invest in Regulation S+, right? Because the average company is not going to want to go through all that criteria with the SEC, especially if it's expensive, right? Because I mentioned before, Regulation A+ could cost up to 100 grand or even more just to file. In terms of filing fees, legal fees, not every startup has that kind of capital. So most of them will either opt for a Regulation D and probably a Regulation S. So the downside with that is the US is not being part of the innovation. But I mean, I think that's really been happening the last few years. So being on the Crypto World Tour, going to over 40 countries now, over 45 countries now, America is really behind in innovation when it comes to the blockchain, utility tokens, and the same thing is going to happen with security tokens. Hopefully the SEC comes out with some kind of new law to make the US investors have an opportunity to invest, because right now it's really the rich. So unless you're rich or you have a rare opportunity to invest in a Regulation A+ or CF STO, most of the opportunities unfortunately will be for non-US investors or rich people who are in the US. So the only option right now is to just make the best of what you have with Regulation A+ and CF and try to find those diamonds in the rough, or make your money quickly via other opportunities, trading or what have you, and then get into STOs. But hopefully the SEC creates some new law to make things easier. But I mean, yeah, those are definitely concerns. I think it's time for us to recap, right? But before we do that, let's just kind of put things in perspective. We had the Bitcoin bubble. Up to 2013, Bitcoin went from $0 to all-time high of $1,000 before crashing after the Mt. Gox hack. But people made lots and lots of money. And people thought Bitcoin was dead. But a few years later, as mentioned before, Vitalik came on the scene, Ethereum happened, we had the ICO bubble, utility token bubble. People made lots and lots of money, 100x's. I mean, they're just being passed out. I know in December 2017 to January 2018, Icon for me did 100x and my community. Wabi did 100x, almost 150x, I think. Dragon Chain was at 80x. I mean, where in the world can you turn 1 grand to 80 grand or 1 grand to 150 grand in like 4 or 6 months? I mean, the opportunity, that's why it's called a bubble. I mean, there's just so much opportunity. I mean, this was the biggest wealth transfer in human history, but it was also one of the biggest wealth losses in human history after the bubble popped. So the whole point was you have to be early in the bubble. And most of us were early in the bubble, those who watched the last ICO video. So now, when it comes to STOs, security tokens, and security token offerings, the idea is to be early in this bubble. We have to be in and have our positions before the bubble takes off and before it pops. Because, I mean, not everything can sustain forever and ever, right? You can't keep on going to the moon and beyond forever and ever and ever, right? Eventually, you have to come back down to Earth and get more fuel, then go back to the moon, right? So when the ICO bubble popped, we're now back here on Earth, we're getting more fuel, then we're going to reload and go back to the moon and beyond. Now the question is, how is that going to happen? I mean, I personally think security tokens will provide an opportunity. So do lots of people out there, right? Because, I mean, there's just too much money in this space that's going to come into this space for there not to be an opportunity with somebody to make money. I mean, because if we're smart, if we do our homework, do our research, we will find ways to make money on this, right? I mean, that's why I'm right now working on pivoting, not really pivoting, I would say expanding and finding out a way to do a data-driven analysis on security tokens, on equity investing, right? I call this VC metrics. So the same thing I was doing with ICOs, it took us a while, right? It wasn't instant, it wasn't a quick win. It took us a few months. Then we finally cracked the code, we hacked the system, then 100x. Not financial advice, right? So now the same thing with STOs and security tokens and investing, right? Because I think the same system won't apply. We have to really come at this from a different angle because now we're getting actual ownership in the company. All right, so I feel like we have to really change how this is going to be viewed, how this is going to be analyzed and scored. And I've been working on this the last few months. I'll be launching this hopefully sometime this next few months. I'll be sharing this publicly via my YouTube channel. Make sure you subscribe to the channel. Diary Made Man, hit the subscribe button, like the video, share with your friends, right? Because guys, don't forget, the last video, I mean, it was life-changing, right? Obviously, past performance is not indicative of future results, but I mean, it's a good history, right? So, I mean, do you want to be wrong twice? But anyway, I mean, I think this is really a big opportunity, and I think there's so much chance for growth, so much chance to do the same thing we did twice. We have to be in before anybody else is in. We have to believe before anybody else believes, right? And why do we believe? I personally believe because over $256 trillion of assets can be put onto the blockchain and tokenized as securities. Over $69 trillion from global exchanges around the world can be tokenized as securities. These are real assets with real legal protections and investor rights. Basically, if you take that L, you can go to court and get your money back. And with the old way of doing things with ICOs, 8 out of 10 were scams. 81% were scams. I mean, you guys know, you guys probably took lots of L's on them as well, right? All of us did. But now we can really clean up the space and get the legal protection and have actual ownership. Plus all the stuff, all these security tokens were doing before the SEC came in and cleaned up the space and said, hey, you guys are, what you're doing is a security. Now all the stuff they're doing, if they get approved as a security token, they can legally do it without having to worry about it, right? They can legally give out dividends, profit sharing, they can legally do all kinds of things, right? So for example, I mean, lots of tokens were trying to artificially affect the value of their token price. But now, if you're a security, you can do that on purpose and it can be legal. So I think that's amazing, right? Because if you go on Wall Street, so many companies issue buybacks and dividends and all that stuff, and it's legal. Now we can legally do it, meaning that we can really protect our investment. And when it comes to STOs, I mean, so I think what happened with ICOs, the same thing will happen, but this is a much more cleaner way of doing things. In terms of platforms, we have sharespost.com, banktothefuture.com, stomarket.com, which is a directory for STOs. Also, my friends down there in Miami, Mario and Horig, good guys, very, very early in the STO space. StartEngine.com. So they're definitely platforms, right? And I'm sure after this video, there'll be even more platforms out there for STOs as this starts to peak and kind of bubble up, right? But we're here early, similar to the ICO bubble. When it comes to issuing tokens, there are platforms out there like Harbor, Securitize, Polymath. You can go there as an entrepreneur or company or anybody out there trying to issue a security. You can issue it and they handle pretty much everything for you. The KYC, the AML, the regulations, paying dividends, the buybacks, all that stuff. It's an easy to use platform for issuers. And when it comes to trading on exchanges, we have Open Finance and T0.com. I'll also be planning to do AMAs with all these different platforms I cover, right, with the founders. So make sure you subscribe to the video to watch the AMAs with the founders. I have Open Finance, which is coming up in probably in a month or two. I have an AMA with the CEO. So you guys can ask him questions directly about how to trade on the platform. And he did tell me this, guys. He told me this. On their exchange, you don't have to be accredited to be trading on the exchange. Meaning that, yes, initially, in terms of investing in the STO, you may have to be rich or, right, for Regulation D. But for Regulation A+, CF, S, all that still applies, right? So if you're outside the US, basically, you can still participate on these STOs, but also trading on the exchanges, right? And if you're in the US, you can still trade on the exchanges. You just have to kind of qualify or wait for a long period of time before anybody can trade them publicly in terms of people who aren't rich. But guys, I mean, that was a lot of stuff. I mean, so much stuff. I mean, this is definitely a lot more technical than the last ICO video, but it's something that you can't really prevent, right? Because it's security tokens, right? There's just so much regulation and terminology and stuff like that. But I mean, if you guys were able to make it through this video, I mean, you guys are soldiers, you guys are troopers, you guys are doing your research. Because like before, like with the ICO video, I think this is going to be a huge opportunity. Will it be the same thing like the ICOs? Who knows, right? Nobody can really predict the future. But all I know is, I mean, the first step in success is showing up, right? I know myself personally, I missed the Bitcoin bubble, but it didn't matter. I showed up for the utility token bubble and the ICO bubble, and I made my life-changing money. So now I learned from that, and now I'm going to show up for the security token and the STO bubble. Now I've seen what's happened with the utility tokens and the ICOs. I know what's possible. I've tasted what's possible. So now I'll be first in line waiting to see what happens with security tokens, because now I know, okay, you know what? I did this last time, but I messed up on this. So now I have experience under my belt, and so do all of us, right? Now we can apply the same strategy, same methodology to this new bubble and probably even make even more money. So if you guys are dedicated to this, let me know in the comments down below. Post down there if you think security tokens are the next big thing and how you plan to take advantage of this opportunity. If you guys made money on the last ICO video, let me know in the comments down below as well. But guys, I mean, I'm ready, I'm pumped. I'm coming out there in line, waiting for that STO to drop. If you want to learn more about everything I've covered here, this has been a pretty long video. I know some of you guys like to read this, so I'll be making a free guide, a free ebook on just security tokens, right? Make sure you go to my website, ianblainer.com/security tokens, download my free book, join my Telegram group, my mastermind. We have over 20,000 people around the world talking about cryptocurrencies and ICOs. And now we're going to start covering security tokens. Guys, this is the mastermind group with so many people around the world, so much knowledge, who've made lots of money in the space. And now we can all bring our knowledge together and help each other, right? Because it's about making money by helping everybody around us. So if you guys want to join this, go to my site, click the link down here below, or go to ianblainer.com/mastermind for the mastermind group, or go to ianblainer.com/security tokens. To the moon and beyond.
100x, 100x, 100x. What is up? Summer stand.